What's going on, guys? Russo Trades here. Just wanted to talk about the difference between what we do, which is called day trading, and the difference between long-term investing. So some people get it confused. Day trading, we're here to learn how the markets move and catch a piece of the market every day. We're in, we're out. We can take a buy and make money, or we could take a sell and make money. Let's say we have right now I have three of these $50,000 accounts with Top Step. They were $40 a piece. You pass the challenge, then you get funded with the money. That's how that works. So let's say I have a $50,000 account, which I have three of them right now, and I see this inverse right here. I want to go short once it breaks, stop above the high, going for, let's just say, a 1 to 2. So I would risk normally 0.5% or 1%, which is, $500 or $250 to make 500 or to make 1,000. So risking 250 to make 500 or risking 500 to make 1,000. And that's a risk to reward. That's an inverse play right there, but I can sell it and make money, or I can come here and there was actually an inverse right here. As you can see, I would go long here, stop below the low or a candle close below. Let's just say we go for a 1 to 1 and it's probably about to hit any second. Let's say I risked 500 on this trade. I risked 500 to make 500 and I just took a long. So I could take a short, I could take a long. Like it really depends, but we're taking small pieces of the market every day. We're not here sitting and waiting 20 or 30 years to make money. Eventually, once you compound your money and build enough capital, let's say $500,000, $250,000, $1 million, whatever you end up with compounding to and um profit wise, then okay, let's look at investing, 100,000 into let's just say you can analyze the stock, the stock is going to rise over the next 5 years. And so you want to long term invest in that. And so that's long term investing. And so you don't make any money when it goes down. You actually lose money. So with long term investing, it's kind of like you need a lot of money to long term invest. Also, you only make money if it goes up, which is, it's like, it is what it is. When I get there, I'll get there. But in terms of day trading, there's nothing better than it. Like if I had to choose between long-term investing and day trading, I would choose day trading because why? Because I can build my capital very quickly, I can scale up very quickly, and I can get in and out very quickly and get paid also very quickly. So long-term investing is more so if you just have a bunch of money, it's sitting and you have some very good stocks that you analyzed using whatever strategy. I mean, ICT strategy works on the higher time frame. So definitely when the time comes, we could, let's just say here on the daily, there was an inverse on gold. Like let's say I wanted to invest in gold about, it's funny, this trade right here, I'm about to show you guys on gold. This was on February 14th and yes, I know I could have cherry picked it, but in live time, if you trade inverses and you looked at the daily chart on gold in live time, you would have seen, what did we do? We swept liquidity. We delivered from this very small fair value gap and we inversed this. And we went from 2041 all the way to 2226. So depending how much you invested in gold, let's say here I bought an ounce of gold, which is $2,000 per ounce. So per ounce, you would have went up $200, And I do think gold is a very good long-term investment. I'm not the biggest fan of crypto, but maybe crypto will keep pumping. It really depends. Sad to say, I don't really believe in the U.S. markets really rising anymore. It's very engineered. Like our economy is going to shit. The America's going to shit, but our markets just keep rising. I mean, that's just because the Fed keeps printing more money and pumping it back into itself. But that's a whole nother topic within itself. But so if you like people back then, obviously back then the long-term investment was what? Put your money into the S&P 500, make 5 to 10% a year on your money and keep working your job and you eventually retire with your S&P 500 or your 401k or your pension or whatever. But honestly, I don't foresee the S&P just like it's not going to keep doing this. We always crash at some point. So you don't want to have your money in here when it crashes. That's why I don't long-term invest as well. When it does crash, that would be a good time to buy though. Like the COVID crash, the 2008 housing market crash. There's been a bunch of crashes over time. But yeah, we're day trading. If the markets crash, I can short it all the way down, trading my same setup, my inverses on the lower time frames, tied in with the higher time frame bias. So that's really all this video was about. I honestly shouldn't even have to explain this, but I know some people fail to do their own research. Some people fail to look into it for themselves. Maybe they just don't care enough. It is what it is. But thank you for tuning in, and I'll see you in the next one.